Hey traders, this is Ron Haight. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll start here with the spiders down a whopping 36 cents. But the question is, what happens if the SPY ETF of the S&P is above its 200-day moving average in purple, but the SPX itself, the index, is not? What does that mean? It just means one is and one isn't. That's it. There's no yellow flag or major divergence. It's just the way they trade. The SPX hit the 200-day, got rejected. Yes, that's going to be key resistance. You're going to hear some other folks talking about it, and that's totally fine, totally valid. But no, it's not like a yellow flag situation. The reason I use the SPY is if you come in here to a chart, you now can see volume, and it's a lot more easier to trade. When you start trading like E-mini futures and things like that, there's a lot more risk, different type of risk you could say that's involved. This is just the most simplest way to get through the markets, in my opinion, speaking to the most people. So the SPY had 57.9 million shares today. It's very, very liquid. It's above its 200-day. That is a mini breakout. Is it nicer if the SPX itself, the S&P 500, gets above the 200-day too? Absolutely. Adds more credibility to the rally, you could say, or to the bullish confidence. But no, it's not like a massive divergence just because one is and one isn't. As a trader, you can just decide on your own, do you want to use both above the 200-day or just one? Me, I have enough stuff to look at. I just go to the SPY, and I know that the SPX is just a little bit behind. And a similar situation, too, if you want to look at the Russell for something different. Here's the $ RUT. We're still about, what is the 200-day? It tells you 1588. We're about 70 points away from the 200-day. So if we were to go to the IWM, it's going to be about $7. We're about 151. It's up there around 157. Basically, again, $6-7, same difference. I will say this, though. If you want to talk about a potential massive situation right now, this is the left shoulder of the Russell, and it works this way for the other indexes too. Here's the head. We don't really have much of a right shoulder, but if we were to get a dip here, man, that would make a perfect inverted head and shoulders, and the neckline would be the 200-day. Now that would be pretty crazy. And the same thing here. Sorry, $SPX. Look at this big spike rally. We're hitting the 200-day, little pullback. The key marker on the SPX, which is just like the SPY, is right at those previous tops in October, November, and even in early December. Watch that 28.15, 28.20 area. And on the SPY, it's basically right at 280. So we'll keep watching those. Now, really quickly, we'll go through some other stocks to watch. Again, inverted head and shoulders here on Home Depot, left shoulder here, or count them as both. Head down here, the neckline right here at the 200-day. Keep watching Home Depot. A close above the 200-day moving average would technically be bullish. It would be a breakout target, previous highs at 210. That's 20 points. That's 10%. That could potentially be tradable. So I'll keep an eye on that one as a trade idea. Take-Two Interactive, reason why protected puts are so valuable. Stock lost 13.76%, epic volume, 18 million shares. I'd have to go back 2 years on Take-Two, and it's the highest volume in 2 years. But we're already trading at this level right here. Given that we finished near the lows of the day with that kind of volume, probably tells me more is coming. The technical target right now would be a gap fill going back to July and August of 2017, which also coincides with a little bit of a high. If that gap can't hold at 80 as support, the next one, 70. They're chunking support here in $10 increments. SPOT, Spotify, interesting move today. It gapped lower. If I zoom in here, it gapped lower and then closed at the highs of the day. So it's still a red candle as it closed lower than the previous day, but it also closed higher than where it opened. That's why it's a solid red body or a clear red body. I should say an empty red body, clear, versus a solid color like something like this or like this. That's where it opened lower, closed lower. Here we opened lower, closed higher. What's the deal here? Watch basically 141. A close above 141 is going to clear these previous highs. And frankly, you start talking about something up near 180 as resistance. Now, the 200-day moving average is just starting to be plotted because this company just came public in April. That right now is around 157. That would be a natural point for potential resistance. But to me, it's so new of a stock. I don't know if that's going to play that big of a deal. Again, left shoulder here, head here, and then right shoulder here. So watch 141. Google, The reason I'm not talking about it a whole lot, we needed to break out. Yesterday was earnings, gave us a reason to talk about it, and then it gave back some gains. Today almost down 29 bucks. It's now going to need to take out yesterday's closing high. So the closing high from 2.5 was 1151.87. We could set alerts at 1152. A close above there, target 1215-ish, and then back up towards 1265-ish. Google here is still performing almost a cup and handle type pattern. Facebook, it did its best faceplant impression for a while. Now it's starting to stay above its 200-day, tacking on a little bit of gains here since earnings. The real big target right now is up around 215. I am not saying it's going to get there. This company is one scandal after another, but it's amazing how it just quickly gets pushed away from the headlines. And frankly, the bulls don't seem to care. They just want to buy it. Where would I get concerned if it rolled over? Right now, frankly, I'd put the 200-day on there. We need to stay above there. We got above it. Well, let me rephrase. We got to it. We couldn't even close above it on earnings. Below it the next day, and then finally got above it on the 4th, which would have been Monday. It's telling me there's a bit of an issue there. We get below the 200-day, I would turn immediately cautious, neutral, and then the gap fill would be on the table. So heads up there on Plant or Facebook, whichever you like. I wish you guys a great rest of the week. I'll be back here with you again tomorrow with another video. Take good care.